One of the most notorious months in the investing calendar has arrived with a bang. You've likely heard the expression, sell in May and go away. And after all that's happened this week, you may be tempted to act on it. But I can almost guarantee you've never heard of the earth-shattering Wall Street event headed straight for US stocks in less than 60 days. Now, the date is all set. It's coming. 63 funds are actively preparing to send shockwaves through over $10 trillion of American wealth. And you have mere weeks to get ready before a wave of volatility crashes over half of the US stock market. My good friend and brilliant forensic accountant Joel Littman is stepping forward to help you protect yourself and get ready on Wednesday, May 10th. If you have any money in IRAs, 401ks, annuities, pension plans, stocks, or bonds, I urge you to give Joel's warning your most serious consideration. It couldn't be more important to protect your wealth in the weeks ahead. Again, Joel will go live on Wednesday, May 10th with all the critical details. Head to 2023warning.com now to make sure you're on his list for updates. Again, that's 2023warning.com. Don't miss it. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show. We are catching up with Gareth Soloway of InTheMoneyStocks.com and VerifiedInvesting.com this Wednesday. Gareth, always good to have you back on. We have a lot of ground to cover today. Welcome back.
Thank you so much, and we certainly do have a lot to discuss.
Yes, well, I think we're going to start talking crypto here with Bitcoin getting a nice bounce following the cooler inflation numbers we saw coming in. And we also want to talk Ethereum, want to talk a lot of other things in the crypto market, especially as Treasury Secretary Janet Yellen warns of a looming economic and financial catastrophe. And with the banking crisis we're seeing here in the US, the question really is, Gareth, have the floodgates opened for the crypto community here?
Well, it certainly does seem like that. If you look at some of the meme coins that are going nuts, the speculation that's going on in a lot of the crypto sphere, it does seem like the floodgates are opening. But the price action on Bitcoin, while a little bit of a pop today, it's not enormous. It's taking us back to levels we were just at 2 days ago. And I would dare say that we're still stuck in this trading range of around 30,500 to 27,000. And the other thing I would say is that leading into the potential default for the U.S. government, this is when Bitcoin needs to shine. Right? We saw it shine or start to shine with the banking crisis. The potential for a default should be seeing even more price action to the upside. So these are the things I watch as a technical trader is if we're not getting a bigger move later this month in Bitcoin, I would start to get very, very bearish.
Okay, and if you don't mind bringing up your Bitcoin chart here, Gareth, so we can really look at what you're saying, because I know the last time you were on, I asked you, what would it take to convince you? And you said you would have to see the 30,000 handle, but have it stick for a length of time. So we haven't seen that yet. I mean, the question is, could we see it now? And then are you sticking to that thesis, or why are you still seeing bearish clouds for Bitcoin?
Yeah, so a couple different things, right? And you're right. Here's the chart. We have that trend line that I had in last time we discussed it, right at that 30,500 level. We pierced it briefly a couple times and then came right back in. And we've really gone into this sleeper mode. If you go back to, mid-March, we're still sideways in this 27 to 30,000 range. So to me, this is a level that is still reminiscent of a bear market rally. If we get above, like I said last time, above that 30,500 level, we can start to talk about maybe the low was 15.7. But as of now, I don't see that. And I still see speculation. I mean, in trading markets, including commodities and cryptocurrencies and stocks and everything else, bottoms are made when there's massive amounts of fear, and people are very skeptical initially when something takes off. With Bitcoin, it hasn't been like that. We've seen the speculation in PepeCoin and all these other meme coins. It's a casino. And that's not the sign of a bottom. In addition, I look at what's going on with the government regulation. The government's purposely holding back regulation until they launch their CBDC, which then brings into the question of, is Tether even worthwhile anymore? Is USDC, is that even worthwhile if you have a CBDC that's basically fulfilling that job? Right. Does that have an impact on the cryptocurrencies as well? And then you go to the stock market. And again, I go back to the speculation, the valuations. Apple's trading at a 28 forward PE. That's ludicrous. We have to see speculation come down. I think the stock market comes down, and therefore it brings crypto down too.
Do you mind overlaying on that chart the S&P? Yeah. So what are your expectations for the S&P? Are you seeing some sort of correction heading into the summer here?
I am. I am. I actually have a very bearish outlook on for the second half of this year. I'm actually looking at a correction of as much as 20% in the S&P 500. The charts are telling us this too. I mean, if we just look purely at the S&P 500, in fact, let's go right to that chart right now. What we see is a chart that had a big drop following the 2021 highs in October of November, in January of 2022. We saw the big drop. We've then seen complacency take hold. And this is really important for investors to understand. This is the way tops are made. You have this euphoria, which we saw in 2021 in all markets, including stocks and cryptocurrencies. You then have a dip, and then you have sideways consolidation. In fact, let me see if you would just let me bring up this chart of the NASDAQ composite. I want to show you this because I think this is a game-changing chart, and I'm going to put two side by side here. So here on one side, let me bring up the NASDAQ as well. We're going to look at the NASDAQ in two charts. All right, we're going to bring up the weekly chart here and the weekly chart here as well. And what I want to do on this weekly chart, going all the way back, we're going to go all the way back to the 2000 market when the dot-com bubble hit. Okay, now what we see here, look at this. This is just, by the way, Danielle, this is the stuff I live for, right? So what we saw was this down move off of the euphoria, right? We all agree that the dot-com bubble was euphoria. We then had the down move, and then look at the pattern that happened before the bigger move down occurred. And then if we go here, we look at the same sort of pattern formation, right? And so my thesis is that this is just the beginning of a bear market that we are entering in. And if we look at what the NASDAQ did, we know, first of all, the NASDAQ didn't make highs for 10 to 15 years. In fact, I think it was even 16 years. I actually think we're in the same position here where we've had so much bloat due to Federal Reserve printing of money that when this starts to drop, we're going to see the NASDAQ not make highs for probably at least 10 years going forward. But again, the mirror images on the charts are scary here in terms of the 2000 period and what we're currently seeing.
So two things here that I want to help understand. One, is your thesis tied to the fact that you think the Fed takes a pause next and that's what's going to cause markets to rip here or something else?
No, that's basically the thesis of it, is that if you look at, first of all, the cycles, you have a cycle here where we're due for a corrective move. It's been an elongated bull market if you go back to 2009. It's all due to Federal Reserve printing of money and low interest rate policy, essentially they were just dropping money left and right, free money and printing money. The government was sending out checks. And then you look at what's happening now. Yes, inflation, we saw the CPI data come in a little bit, but it's not going to get back to 2%. It's just there's too many issues. The first drop from 9.5% to where we are now at 4.9, that's the easy amount. That's the easy drop. That was supply chain. The problem is wages have gone up. And it becomes very sticky. Once those wages go up, it's very hard to get that genie back in the bottle. So you're looking at inflation that probably stays at 3% for multiple years, and that essentially handcuffs the Federal Reserve. The Federal Reserve is going to be very, very careful and wary of printing money or lowering interest rates with inflation, let's say at 3 or 3.5%, because they're going to worry it's going to be a big pop to 15% as the next result. So without printing of money, this market has not been a real market for a long period of time. And when the investing public realizes that the Fed's not going to come to the rescue, that's when you see real panic set in.
But they've come to the rescue of the banks.
Yes, but again, yes, and you're correct on that. But the key is here is that when you see the rescues for the banks, that's not inflationary, right? They're basically making sure the banks aren't blowing up. They're making sure depositors are made whole, but they're not printing money. In fact, you could argue that what's going on with the banks is actually the banks are tightening credit. The banks are being more careful on lending, which is actually working to tighten monetary policy via the banks. So it's interesting, you're right, that they have come to the rescue of banks, but it's actually worked towards tightening versus loosening policy.
Help me understand the psychology of the investor here, okay?
Right.
And it's probably going to be a very big question, but let me frame it up for you, right? Given the context of the banking crisis, right? Like you said, there's fear, especially at the regional level. If folks have their money at a regional bank, where are they putting the money now? Obviously, the Bitcoin maximalists were making the case, look at the banking crisis. The only safe place to be is Bitcoin. based on your analysis, not true yet. So where is the money going?
So you're right, and right now, let's call a spade a spade. The retail investor is still in the mindset that the Federal Reserve will come to the rescue. All right. So again, we've been conditioned. It's almost like ringing a bell and the dog comes to the food.
Yeah.
The same thing is true for investors. Investors have been conditioned since '09 that the Federal Reserve, any sort of big hiccup in the economy, the Fed will come out and print money. And so what we see buy the dip continuing. We see it in crypto. We see it in stocks out there. And that's creating this false sense of security, or what I call complacency. At some point, that kind of mindset of the investor will shift dramatically. So again, to me, that's where the market has a lot of issues in the future over the next 6 to 12 months.
Garrett, just a few thoughts on Binance, the world's largest cryptocurrency exchange, coming out saying they're very concerned about regulation in the U.S. They hope to move all the business to the U.K. How would that change the landscape at all?
Yeah, and I think it's important for investors to understand what's really going on here with the U.S. government. The U.S. government is following the Chinese playbook. Now, the Chinese, what did they do? They banned Bitcoin. And they said, okay, let's launch a CBDC, the digital yuan. And they had to ban Bitcoin because they didn't want the competition for the CBDC. They wanted the digital yuan to gain traction and start to be used as a currency, which it is now. It's being intercontinental. We're seeing trade with China being conducted with many countries with the digital yuan, right? So that was their playbook. And now look at what China's doing. China's actually saying, okay, well, now we'll allow people to be involved in Bitcoin again because we have our foothold via the digital yuan. The U.S. isn't about to ban Bitcoin, right? That's not going to happen here. But how are they doing it? They're doing it in a different way. They're not allowing regulation. They're not giving any guidance on regulation. We know, is it a security? Is it not a security? Even Coinbase, right? Coinbase has said, hey, we may have to leave the U.S. They're suing the SEC to get clarity, and the government's just like, nope, we're not going to give you clarity. So this is the way the U.S. government is handling it until they launch their CBDC. So I'm in the full part now. Until we get a CBDC from the Federal Reserve, I don't think you're going to get regulation in the crypto markets in the United States. And that's done on purpose. And in all fairness, I think the Ripple decision with the judge, that's already been made. They're just not allowing that out yet. So when you go to Binance, these are things that the Binances of the world, the Coinbases of the world, they have to do. They might have to end up moving if we don't get this CBDC to be launched and regulation fast enough. So it's a mess, but the bottom line is that there's a real threat. Governments view Bitcoin as a real threat, and they want to get their foothold. China did it. Now the U.S. is trying to do it.
Gareth, it's interesting. The words you're using, you're speaking as if you're 1,000% certain the CBDC is coming in the U.S.
Yeah. Yeah, I mean, there's no doubt in my mind. There's absolutely no doubt. In fact, I read something about something called Fed Now, which is going to be a digital payments form, right? And so that's essentially what they're trying to launch here. And basically, again, what the U.S. government wants to happen is they don't want people using Bitcoin to transfer wealth. They want it done through their digital currency, so it's easier to track and it's easier to monitor. And again, I don't blame the U.S. government for doing it. If I was in that position, I might do it as well. It's just, again, it's being shady to the crypto sphere.
And the Fed has made it clear that the Fed Now is a payment system. It's not a central bank digital currency, but it's the plumbing of it.
Right.
I guess
I mean,
if we had
if it looks like a pig and it acts like a pig, I don't know. It might be a pig.
Okay. Do me a favor, if you don't mind, pulling up a gold chart and also pulling up a U.S. dollar chart. Want to bring up, you mentioned China. China keeps adding to its gold reserves. So we're basically seeing them cooling off. They're swapping out basically U.S. treasuries for gold. I bring this up to your point earlier about countries, dumping U.S. dollars. So I just want to track the movement of gold and track the movement of the U.S. dollar here.
Yeah, and so I think with China doing what they're doing, it's twofold, right? So they're fully aware of the printing that has gone on from basically every central bank in the world. That obviously leads towards gold being something that people want to hold on to. In addition, I think it's part of that Cold War, if you will, with China, where they're trying to diversify out so that if they decide to invade Taiwan, they're not at the at the mercy of complications from the United States by holding too many treasuries or doing anything else, right? So I think these are all methods that they're using to try to free themselves from having the U.S. have too much control over them. Just from a chart perspective, gold is behaving beautifully. You know I've been a huge bull on gold since last year even. And again, what we see is it's now hit what we call a triple top on the chart. A little pause here is normal. Triple tops usually get broken to the upside. So I think you're on the verge of a bigger breakout. Doesn't mean we can't have a pullback to the 1900 level here, but for the most part, if I'm going to be in a place, and we talked earlier about where do investors hide, I think cash is a place, I think gold is a place, and then I think that there are specific areas elsewhere where you can kind of find safety as well, but you got to be very careful about the equity markets as well as the crypto markets.
So wait, you would be long the US dollar here?
I think just as a safety play, yeah. And don't get me wrong, I think de-dollarization is absolutely happening. It's just not something that's going to happen overnight. So if you're looking at a shorter-term holding period, I think being in the dollar, if we see panic across the world, countries are still going to rush to the dollar for safety at this point. Slowly that will change, but it's going to be a 10-year narrative kind of switch over.
Are you sticking to, I think last time 2,300 was your magic number for gold. Have you moved the needle?
I haven't at this point. Doesn't mean if we start to rip towards that sooner than I expect, I want to adjust it. But I think 2,300 would be a perfect target. And then I think in 2024, you're looking at, potentially 27 to 3,000.
If you don't mind now switching over to oil, I know I have you bouncing all over here, but have we seen the bottom in oil prices, Gareth?
I don't believe so. And I know there's a lot, and I got a lot of chart lines on here, and I apologize for that. I can quickly clean it up. But for me, when I look at oil, I see a pattern formation that is at support, so there's no doubt about it. If we draw our trend lines right in here, right, we can very clearly see that this is a huge level of support. From this level going back to 2019, right through these lows, right to our current lows here. For me, I look at it as more of a macro play. Not only are we slowly switching away from these energy sources, but also you have a looming, probably global recession on your hands as these central banks continue to not want to print money to save the day because inflation remains so high. At some point, that's going to take its toll on oil, and I actually have a next year target of around $50 a barrel. So it doesn't mean we can't bounce in the near term here, but I do think that the highs that we saw with the Russian invasion, that is going to be a long-term high for oil that probably stands for years.
You mentioned Ripple before, so for fun, can we throw up XRP? Because I know there's talk about how that could provide a solution in the central bank digital currency realm. I'd love to get your thoughts on that and whether you're giving it any weight, Gareth.
Yeah, so this is always the tricky one, right? I mean, it's one of the things I pride myself on is not making investment decisions based off one judge's decision, whether it's going to be a positive or negative thing. I think Ripple could have its place, but again, for me as an investor, and again, there's something to be said for taking a shot where you take a gamble and you're like, hey, listen, this could pay out 300, 400%. That's fine to do as long as you go in with your eyes wide open and say, hey, it's a gamble. In this situation, it's not for me. It's not an investment I would make at this point because I don't have a clear edge or high probability one way or the other. So for me, it looks like the chart has it had a beautiful move up. Look at where it's sitting, right back to this high here, right back in this chop, and right here. And essentially, we're just waiting for clarity from that decision.
I don't want to spend too much time on it, but you did mention this PepeCoin.
Yeah.
I'm not sure about the correct pronunciation of it, but we saw that crypto whales have accumulated millions in PepeCoin as trading volume shift to Binance now. Your thoughts in general, right? Because I'm sure you've been getting a lot of calls. Should I, is it too late to get in? Is this the next Doge or, Shibu? What's your takeaway, or what do you tell folks about, chasing these meme coins?
Yeah, so basically, if you decide to invest in it, or as I should say, you gamble with it because it's not really an investment, you're just hoping that someone else is willing to pay higher than you were. So it's essentially a hot potato, right, or musical chairs, and you just don't want to be left out when the music stops and not have a chair to sit in. So again, this is one of those things where, to me, I prefer to go to the casino. I understand that I walk into the casino, I probably will lose my money, but at least I get free drinks. I get to hang out with my buddies and have a great time. Or you can sit behind your computer at home and play Pepe. It's one or the other, right? So for me, this is more than anything a warning sign of the froth in the market that's back. And that to me is a bigger macro indicator that I use in my analysis. So for me, it's not about playing Pepe. It's about what does that mean about speculation and what does that tell us about market conditions.
Exactly.
And to me, that tells us that we're very near some sort of bigger dip in the overall market.
Let's just wrap on this note. A lot of good stuff here. Good roundup. Right now, Gareth, so sticking to the playbook, you like gold, you like cash. Is there any other chart out there that you want to share that you're like, I like this?
Oh, wow. So for me, just to talk about where I'm positioned in my portfolio, I have been inching into shorts on the NASDAQ. I wish I had the chart with me, but I don't have it with me. But if you look at the valuation of technology versus the S&P right now, I believe we're back to levels that we haven't seen since 2000 when the dot-com bubble was in play. So that to me tells me that tech would be potentially the biggest loser in the second half of the year. So I'm starting to inch slowly into positions on the short side of the tech side. And then on the long side, there's always plays, right? Gold miners, gold I continue to like. Some silver a little bit, although the industrial side is a little scary. But I also look at plays like some biotechs that have been beaten down, a Gilead, an Amgen, ones that in bad market conditions, they still pay a dividend and they still can do decently well.
Gareth Soloway, always a fantastic roundup. Thank you so much.
Oh, it's my pleasure, Daniela. Thank you so much for having me. It's always a wonderful discussion.
Gareth Soloway of InTheMoneyStocks.com and VerifiedInvesting.com. Always a pleasure. Hope you enjoyed it. Happy Wednesday. We'll see you soon. Be sure to sign up at DanielaCamboni.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.